Hello traders, welcome back to Forex SPV. Today we're analyzing the charts to prepare for the volatility that CPI data and Fed Chair Powell's testimony will bring. So we have that news later on at 16:30 hours based on East African time. That is CPI and 1800. We'll have the Fed Chair Powell's testimony. Usually I do not wait for the news. I trade the initial reaction by entering 5 minutes before the release. And I usually analyze the market using technical analysis to determine the move. So let's break down key pairs and setups I'll be watching today. So I'll analyze the dollar index and a few major pairs. So here we have the dollar index, which is the driver of the volatility. So before taking any trade, I usually check the DXY, and let us do a quick analysis here. So I'll load a new template. Okay, so this is the monthly time frame. As you can see, the market here opened with a gap. Simply, the closing price was right here and the opening price was here for the next month. And when we look at the key support and resistance levels that are close to the dollar index here, we have the 2. And it is not evident that we have a bearish market structure here. So the bullish market structure still holds. So from this area of support here, we had a bullish market structure and it still holds. Based on that, and here we have, this is the weekly time frame. We had a very good setup here for a buy, a retracement, a continuation, another retracement, and it is now around the 13 EMA here. So you can see pins around 13 EMAs. You can see how the market opened with a gap here. So we have a close price and the open price for there. Next week, let's go down to lower time frame. So the lower time frame, this is the daily chart, and here we can see these candles are confusing. This is quite confusing. And if you look at it, we had our first uptrend move here, the first move, the second, and the third, and the market did form like a head and shoulder pattern here. So a head, a shoulder, shoulder, and we had this move going down, but then it was rejected, and we have another move. So perhaps it will form a W here if at all it doesn't break this area of support here. So when you go to the hour 4 time frame, let's look at the TDI. Okay, so we have this large shark fin here, but it was not around the level high. So 1, 2, 3, and then we had another small shark fin here, and now we are going up. Here we had a bullish gap lay, and it looks like we're going up. When you go to the hour time frame, here we have like a combination of exponential moving average here that are close to each other. You can see here we have around all 4 moving average that are close to each other. So this is what we call EMA combo. And if the market was going down, then this EMA combo will be very will suffice for the market to fall immediately. So yesterday we would have seen a very big move going down, but we have not seen that. And here is the gap. So the gap was created and then it was filled. So if we measure the ADR from this point, so the ADR is around 133. We have the first box here, 133. Go to the second and the third. You'll see the market did move around 3 levels here. So if you look, this is like the first level, and this is the second, this is the third, and we are around the peak here. So I would anticipate for a buy of the dollar. Okay, so that's what I would anticipate. But we need to look on the dollar pairs to determine, because the dollar index is simply a derivative of the dollar pairs. So we'll look if this set would hold for a sell. But as for the dollar index, I would anticipate for a buy. So let us go to Euro USD, so the fiber. Okay, so let's go to the monthly time frame. Let's load the template again. So this is the monthly time frame. And you can see the gap is also in Euro USD. So the close price was here. There's a small gap here. No, the close price was here. The open price was down here. So there's quite a big gap. And let us look on the closest areas of support and resistance that are close to the current market price. We have an order block. Here we have another block. And you can see the market is around the order block here. Okay. Let's go to the weekly time frame. So the market structure at this point is still bearish to me. There is no reaction here that tells me that the market is going to reverse to bullish. And this is the weekly. So the weekly is having a very good W formation here. So if this would hold, it will form a very good W. As you can see from this point, we had the first, the second, and the third level. Let us go to the daily and see. Okay, so as you can see, this is an inexplicable price behavior. And this has occurred based on the because of the transitioning of the Biden-Trump administration and all the tariffs going on, all the deportation going on in the USA. So it's causing a lot of trouble for the dollar index. And Jerome Powell still does not want to print more money because the money supply is okay according to him, and Trump is telling him that he should print more money. So there's a lot of conflict there. So you can see here how price is doing. This is a consolidation. This is like a level 3 behavior before the market goes up. This is a consolidation here. Okay, so you can see the market is still consolidating. And where it is right now, we can have another move going down, because we have seen here, as it consolidates, we have the first swipe, the second, and the third, and here we have the first, the second, and we have the third, before we go up. So this is the alpha. On the alpha, we had like the move here going up, and we have the move going down. But yesterday we saw an uptrend, and euros were going up, but also the dollar was selling yesterday. So let us measure the ADR from this peak. So the ADR can freeze around 243 pips. So basically, this cycle was completed, but we had a gap here, and then we had a move going up. So it's around 235, 235, 243. So only 10 pips missed, so it's okay. And we had this here. Let us draw the ADR boxes from this point. So it's 81 pips, and 86. Okay, so let's find, I'll put it around 83. So that's the first ADR, the second ADR. So if you look at the levels, the first level, the second level, and I would assume this to be a stop hunt before the news release, so that we can have a head level. So I would assume the market would come back to yesterday's high, and then we continue going down. So that's my anticipation on Euro USD. Let us go to GBP USD. Let me load the template again. Okay, so let us look at the close area of support and resistance. So we have the areas of support and resistance there. And I would say that the market structure here is still bearish. Okay, there is no significant evidence for us to say that the market will reverse going up. Okay, so the weekly time frame here, it's like forming a W. It's not there yet. Like two moves going down. We're around that point. Let us go to lower time frame and see. So here you can see we had a peak. Based on the daily time frame. After these three moves going down, at the peak we had the first move, the second, it was rejected, a retracement, and then another rejection. So this here can be another peak formation high. But then here we have like an area of support. Let me look on the hour time frame. Here we had the first head and shoulder pattern. A move going down. Here we had another peak. Here we had another peak. So IDR is around 303. So at this point, we had a quarter to quarter movement there. So it moved from this large quarter here to this large quarter, and then it reversed to this large quarter again. And then you can see here, we had a move to the half point. Okay. The first move to the half point, it came back to the large quarter. The second move to the half point, very close to the station zone, and then we're having a retracement there. So if you see the market maker cycle is having bigger retracements like this. So the first level is having bigger retracement. You should expect for the second level to have bigger retracement than the third. So 101, that's the ADR, and here we have another 107. So the average will be around 104. We had the second ADR, just like Euro USD, and the third. So we have 2 points here where the market would go. The first point is where the market is at right now. So the market is around the blue tracer. So it might be around that area until the news release and sell immediately. Or it might go up to this point here, where it's close to the large quarter point, and then sell from there. But I would assume the market will remain at this point until the news will come, and the dealer would use the news to perpetuate the move. So I'll draw a box around this point, show that the market will remain there right now. So that is GBP USD, also known as the cable. And let us look on gold and USDJPY. So here we have gold. Gold is very, very good to sell. This is the hour time frame. Let's look on higher time frame. So the hour time frame, gold formed a new high. You can see it did break this high, and then it went to form a new high. And you can see the momentum is still going up. The momentum is still going up. This is the weekly. We had a very good support area formed, and then the move going up. So the TDI based on the weekly time frame, you can see here. The TDI, for the first time, it was around this area. It formed the shark fin. We had that retracement, this one. And we had another shark fin here. We had this retracement, which is this one. So if the market goes to form another shark fin here, we'll have another retracement and then a continuation going up. This is it's a safe haven for investors, and it usually reacts aggressively to CPI. So we need to be careful with it. So here we have like an order block around this area. if the market will retrace to this point and go up, that will be my anticipation. Go up, continue going up. So on the hour 4, we're having this is like a big M with a W. So you can see we had a higher high here and a lower high here, but according to the market, we had okay. So here we have a divergence here. So we have a divergence between the TDI, the RSI price line, and the move up here. So if you look at this, we had first the higher high and the lower high, and here we have a lower high and a higher high. So this is a divergence here, and it simply implicates that the market would sell a bit. And you can see the TDI has already moved so much. TDI has already moved so much, but the market has moved so little. So let us go to the hour 1, and on the hour 1, here is where the market formed a big reset. Okay, so if we draw this to this area, you can see that the market may come to this point and then go up. So the market might come to this point and then go up. So that's my anticipation on gold. So when you look at the 15 minutes, if the market will do a stop hunt, it will do a stop hunt towards the previous day New York high, or even this is the best part where the market will go to this point. So if it will do a stop hunt to come to this point, and then we would have our sales. So that's my anticipation on gold. But then we would have a continuation going up. So let us look on USDJPY. This is USDJPY. So monthly time frame, you can see the market was rallying going up. And here we have a little retracement up into the 13 EMA. Let us see if we will have a continuation. So this retracement started from this order block here, and we came back to this order block here, and then we would assume if the reaction is good, we would continue going up. So on the weekly time frame, you can see the market is trying to form an area of support here, so that we would go back up. So it has started the week very strong going up. All the JPYs moved very much. And here we can see around the 200 EMA. Price bounced around the 200 EMA at this point, and it is bouncing again at this point. They had a very good consolidation. So this here might be a reversal for us. This is the hour 4 time frame. The market is still going up. And this here is the hour 1 time frame. We have a very good peak formation low. This is a very, very nice big formation again. Very nice. 152, that's the ADR. So ADR times 1, ADR times 2, is going up for ADR times 3. So the market has moved so much overnight. JPYs have moved so much overnight. So this pair needs to give me a very good retracement for me to take it as a buy trade during the CPI news release. So unless it gives me this, retracement, then I'll just stick to other pairs. So you can see our anticipation here. We're expecting a sell on gold, a buy on USD Let's look at these two here. A sell on Euro USD, a sell on GBP USD. So if Euro USD is going to sell, GBP USD is going to sell, so that means, and USD is going to buy, that means the dollar is a strong buyer there, a strong buyers on the dollar index. So our anticipation was that this was a peak, and we are expecting for the market to go up unless this holds. So we are still having a strong dollar bias for the CPI, but we need to look on how the dollar would move prior to the CPI release. So I'll be monitoring the market prior to the CPI release, and the last minutes before the news release, the last 30 minutes will determine a lot of things. It will confirm if our anticipation is right or it will be wrong. Okay. So I usually put my trade 5 minutes before the news, a very tight stop loss, and I wait for the news to come, and once the news is released, either go in profit or go in loss. So as the spike happens, that is where I will scale out positions. I will move the stop loss. Usually it's a quick move. It's a quick move, 1, 2 minutes, 3, 5 minutes. You have quite a number of pips. You can scalp it or you can hold if the trend is strong and continue making profits. So that is all I have for today. And I'll always remind you to follow us for these insights, for these videos that I'll be posting on a weekly basis. And see you in the next video. Let's hope for the best on today.